Welcome back to the Airbnb Superhost Secrets podcast, where we dive deep into all of the things you need to know to become a top-rated host. And today, we're going a little bit beyond the five-star reviews and the fluffy towels to a topic that I think can make even the most experienced host just a little bit uneasy.
UK taxes.
Yeah, taxes are one of those things that can be a little bit scary, right? But they are so crucial for running a successful Airbnb business. And even more importantly, a legal one. So we're going to try to break down the UK tax landscape, specifically for hosts like you, and hopefully demystify some of that jargon.
Exactly. This is your cheat sheet to understanding what you need to do to stay on the right side of HMRC. But before we get too far, just a quick disclaimer. Neither of us are tax advisors, so think of this deep dive as a starting point. And definitely always seek personalized advice from a qualified expert. Couldn't agree more. Informed and proactive, that's what we want. So let's kick things off with the big one. Income tax. Seems pretty straightforward, right? You earn income, you pay tax. But there are some nuances you need to keep in mind, especially as an Airbnb host.
Okay, so let's say I'm a host, and I'm making, I don't know, maybe £40,000 a year from my Airbnb. What kind of tax rate am I looking at?
Well, that's a really good question, and a pretty typical scenario, actually, for a lot of hosts. In that case, you'd likely fall into what's called the basic rate, which for the 2023 tax year was 20% on income up to £37,700. But here's where it gets interesting. Remember that personal allowance everyone gets? That £12,570, well, that actually means you can earn quite a bit more before you even hit that 20% tax bracket.
So it's not quite as simple as just looking at the income brackets and figuring it out from there. There's these allowances and other things that can really impact how much tax I owe.
You got it. And speaking of ways to reduce that tax liability, have you heard of the property allowance?
I don't think so.
This one's a great one, especially if you're just starting out or maybe have a smaller Airbnb operation. If your rental income is under £1,000, you don't even need to report it.
That's pretty sweet.
It is.
But what if I'm making a bit more than that? Let's say I'm renting out a spare room in my home.
Well, in that case, you might want to look into the rent-a-room scheme. This lets you earn up to £7,500 tax-free from renting out a room in your primary residence.
Oh, that's great.
It is. But keep in mind, if you jointly own the property with someone, like a partner or spouse, that allowance gets cut in half, down to £3,750.
Got it. So both those allowances are great for people with, smaller setups. But what about those of us who are renting out entire properties or maybe have even higher incomes? What can we do?
Well, that's where claiming actual expenses comes in. This can be a real game changer, especially for those with higher incomes or expenses.
Okay.
Basically, it means you keep track of every single cost associated with your Airbnb. And I mean everything. From mortgage, interest, and insurance premiums to those little toiletries you leave for your guests.
So every pound I spend on my Airbnb could actually reduce my tax bill.
In theory, yes. But, and this is a big but, you absolutely need to keep detailed records and receipts for everything. Imagine trying to explain all those deductions to HMRC during an audit.
Yeah, no thanks. I'd rather avoid that.
Me too. So is there anything that can help with all this record keeping? Luckily, there is. There are loads of accounting software options out there, specifically made for landlords and Airbnb hosts. They can help you categorize all those expenses, generate reports, and some can even help prepare your tax return.
Sounds like a lifesaver.
Yeah.
Especially for those of us who aren't, accounting whizzes.
Exactly. Now there's one more important aspect we need to cover when it comes to income tax, and that's the Furnished Holiday Accommodation Criteria, or FHA for short.
FHA. I've heard that term, but I'm not really sure what it means.
Yeah, it can be a bit confusing, but basically if your property meets certain FHA criteria, things like being available for at least 105 days a year and actually rent it out for at least 210 days, you can unlock some pretty fantastic tax benefits.
Okay, I'm intrigued. Tell me more.
Well, first off, you get more flexibility when it comes to mortgage interest relief. Unlike other landlords who face some restrictions, FHA qualifying properties let you deduct all of your mortgage interest from your rental income.
That's a big deal. Especially if you've got a large mortgage, those savings could really add up. Are there any other perks?
Absolutely. FHA income is actually treated as earnings.
What does that mean?
Well, it opens up some other opportunities, like being able to make pension contributions.
Ah, I see.
And get tax relief on those contributions, which you can't do with regular rental income.
So not only can I save on taxes now, but I can also set myself up for a more comfortable retirement. I like the sound of that. Me too.
Yeah.
It really shows how important it is to understand these nuances and structure your Airbnb business strategically. Okay, that makes sense. Now, one thing I've always been a little confused about is capital allowances. It sounds a bit like financial sorcery.
It's not magic, I promise, though it can feel that way sometimes. Basically, capital allowances let you deduct the cost of furnishing and equipping your Airbnb from your taxable profits.
So like bed sofas, appliances, all that good stuff.
You got it. And here's where that FHA magic comes in again. For FHA properties, you can actually claim a 100% deduction on those expenses, up to £1 million, through what's called the annual investment allowance.
£1 million. That sounds almost too good to be true.
It's a pretty amazing incentive, especially for hosts who are really investing in their properties and creating a top-notch experience for their guests.
Okay, so we've covered income tax and all those incredible benefits for FHA qualifying properties. But what about the other tax monsters lurking out there? I'm talking capital gains tax and VAT.
Those are definitely beasts of their own, but don't worry, we're going to tackle them head-on in the next part of our deep dive.
So stay tuned, folks. We'll be right back to unravel the mysteries of CGT and VAT right after this. Okay, so we're back and ready to face the music with capital gains tax, or CGT as the cool kids call it.
Yeah, CGT, it's the one that usually pops up when you're thinking about selling your Airbnb property. You know it applies to any profit you make from that sale.
Okay, so let's say I've decided to sell my beautiful Airbnb cottage, poured my heart and soul into it, renovated it beautifully, and now I'm ready for a new adventure. How do I figure out how much CGT I'm going to owe?
All right, well, first things first, you got to calculate your gain. So you take the selling price and subtract your original purchase price, any legal fees you had, and the cost of any improvements you made. That gives you your capital gain.
Okay, that makes sense, but I bet there are ways to, shrink that taxable gain, right? Please tell me there are.
You bet there are. Remember all those receipts we talked about for income tax deductions? Well, they come in handy here too. Those renovations, those snazzy new appliances you put in, they all add to your property's cost basis, which ultimately reduces that taxable gain.
So keeping good records is a win-win for both income tax and CGT. Sounds good to me.
Absolutely. And speaking of wins, there's actually a tax-free allowance for CGT. For the 2020-2023 tax year, it was a pretty generous £12,300, so you can make a decent profit before you even have to think about CGT.
Okay, so that's a nice little buffer. But what about those hosts who are, really killing it? What kind of CGT rate are they looking at?
Well, that depends on your income tax bracket. If you're a basic rate taxpayer, you'd pay 18% on any gains above that £12,300 allowance. But if you're in the higher or additional rate bracket, that jumps up to 28%.
Ouch. Well, at least it means you're making good money from your Airbnb, right?
True, but and just remember, this is specifically for residential property. If you're selling other assets, those rates might be different. So always a good idea to double check with HMRC or a tax advisor just to be safe.
Yeah, good advice. Now, I've heard some rumors about those CGT reporting deadlines changing recently. Is there anything we should know about that?
Yes, the dreaded 60-day rule. As of October 27th, 2021, if you sell a UK residential property, you've only got 60 days to report and pay any CGT due.
60 days. That seems a bit tight.
It is, and it's caught a lot of people out. So if you're thinking of selling, be prepared, and maybe even consider bringing in a tax advisor early on in the process. They can help you navigate all those deadlines and make sure you're doing everything right.
Great advice. Okay, so I think we've officially demystified CGT, but there's one more big tax topic we need to tackle. And it's the one that I think makes most hosts just shiver in their boots. VAT.
VAT, this one can be a bit tricky. Basically, it applies to goods and services that are supplied as part of a business. And yep, your Airbnb hosting activities definitely fall under that.
But doesn't Airbnb itself, take care of VAT, collecting it and paying it?
That's a common misconception. While Airbnb might handle the bookings, ultimately it's your responsibility as the host to figure out if you need to register for VAT. And if you need to charge it to your guests, you're the one running the show, remember?
Okay, yeah, that's right. So how do I know if I need to even worry about VAT?
Well, there's a VAT registration threshold. For UK established businesses, it's currently £85,000 in taxable supplies over a 12-month period.
So if my Airbnb income plus any other business income I have goes over that, then I need to register.
You got it. And here's a key point. Your short-term rental income absolutely counts towards that threshold. So even if you think your Airbnb is just a little side hustle, you could still get caught by the VA debt.
Wow. Okay, I didn't realize that. So what about hosts who aren't actually based in the UK? Are they exempt?
Not quite. If you're not established in the UK, but you're renting out a UK property,
Yeah.
you might actually have to register for UK VAT right from your first booking. No threshold in that case.
Okay, so no escaping VAT for anyone. So once you're registered, what happens then?
Well, you have to start charging VAT to your guests. The standard rate for holiday accommodation as of December 2022 is 20%.
So I need to build that into my listing prices. I can't just like add it on as an extra fee.
Exactly. The price you advertise has to include VAT. Transparency is key here.
Right, makes sense. And then I have to like collect all that VAT and send it off to HMRC.
That's right. You'll need to submit VAT returns either monthly, quarterly, or annually, depending on your turnover. And those payments need to be made electronically within a certain time frame.
Okay, it's all starting to sound a bit complicated. I can definitely see why VAT is the tax topic that keeps hosts up at night.
It can be a bit daunting for sure, but there are resources and software out there to help you manage it all. And hey, you can always reach out to a tax advisor if you need a hand.
Okay, good to know. So are there any situations where I might be exempt from charging VAT?
There are a few. For example, if you're renting out a room in your primary residence and using that rent-a-room scheme we talked about, you usually don't have to worry about VAT. And there are also special rules for accommodation that's rented out for longer periods like 28 days or more.
Okay, so there's nuance to VAT,
Mm-hmm.
just like with every other tax we've discussed. It seems like it's all about understanding the specifics and getting advice when you need it.
Couldn't agree more. Don't just assume you know how VAT applies to your Airbnb. Do your research, ask questions, and stay informed.
Great advice. Well, we've covered a lot of ground today, from income tax and CGT to the wonderful world of VAT. But before we wrap things up, I think there are a few other property-related taxes that we should probably touch on.
Oh, you're right. We can't forget about those. Those sneaky little extra taxes that can sometimes catch hosts off guard.
Let's dive into those in the final part of our UK tax marathon. Stick with us. Okay, so we're back for the final leg of our UK tax marathon. We've covered the heavy hitters like income tax, CGT, and VAT. But what about those other property-related taxes? You know, the ones that tend to sneak up on you.
Right. Those are important to keep in mind, too. We can't forget about good old council tax and ground rent.
Okay, let's start with council tax. It's the one that always seems to find its way into my mailbox no matter what. So how does it work for Airbnb hosts? Is it different from regular homeowners?
Well, that's where things get a little bit tricky. It really depends on how your property is classified. If you're renting out your entire property on Airbnb for short stays, it's more likely to be seen as a self-catering property rather than a dwelling.
Self-catering versus dwelling. Why does it even matter for council tax?
Well, if your property is classed as self-catering, you'll probably have to pay business rates instead of council tax.
Business rates. That sounds a bit more intense than council tax. What does that mean exactly?
Basically, business rates are calculated differently, and they can sometimes be higher than council tax. But the good news is there's a chance you might be eligible for small business rate relief, which could potentially lower your bill.
Okay, so it's not all bad news. But what about hosts who are just renting out a room in their primary residence? Do they have to worry about business rates as well?
Not usually. If you're living in the property and just renting out a room or two, it's more likely to still be considered a dwelling, so you just keep paying your regular council tax. And here's a bonus tip. Some councils actually offer discounts for hosts who are renting out a room while they're living there, so it's always worth checking with your local council to see what's available.
Discounts. I like the sound of that. Okay, so council tax seems pretty straightforward if you're renting out a room. But it can get a bit more complicated if you're running a full-blown Airbnb business. What about ground rent? When does that come into play?
Ground rent is an extra cost you might have to pay if you own a leasehold property, as opposed to a freehold.
Leasehold versus freehold. Those terms always confuse me.
No worries. I'll give you a quick recap.
Hmm?
Freehold means you own the property and the land it's on outright. You're the king of your castle, so to speak. But with leasehold, you own the property for a specific period of time. But the land it sits on belongs to someone else, the freeholder. Think of it like a long-term rental agreement.
Got it. Okay, that makes sense. So if I've got a leasehold property, I might have to pay ground rent to the freeholder on top of all my other property taxes.
Exactly. It's definitely an important cost to factor into your budget as an Airbnb host, especially if you're working with tight margins.
It seems like there's always something else to consider when it comes to UK taxes, but honestly, this deep dive has been super helpful. I feel way more prepared to navigate the tax landscape now.
I'm glad to hear that. Remember, knowledge is power when it comes to this stuff. The more you understand, the better equipped you'll be to manage your obligations, and who knows, maybe even reduce your tax bill.
Couldn't agree more. And a huge thank you to you for guiding us through this tax maze.
My pleasure. Always happy to share these insights with fellow Airbnb enthusiasts.
Well, folks, that brings us to the end of our deep dive into UK taxes for Airbnb hosts. We've covered everything from income tax and capital gains tax to the ins and outs of VAT council tax and even ground rent.
And remember, this was just a high-level overview. Tax rules can change, so it's essential to stay up to date. And get personalized advice from a qualified professional if you have any specific questions.
Absolutely. So on that note, we'll leave you with one final thought. Don't let the complexities of taxes scare you away from pursuing your Airbnb dreams. With a little bit of knowledge and preparation, you can confidently navigate the system and build a thriving and profitable hosting business.
Happy hosting, everyone!
That's a wrap.